Tax-free Social Security? Are you kidding me? Maybe, but only until 2029. Here's what you need to know.
Retirement Planners of America, RPOA.com.
Hello, everyone, and welcome to the Retirement Planners of America podcast. I am Ken Moraif. I'm the founder and CEO of Retirement Planners of America. And in this podcast, we're going to talk about tax-free Social Security. Whoa! So we're going to get into that. But before we do, I just want to tell you that we work with people who are over 50, who are retired or retiring soon. So if that's you, this podcast is designed for you. And we try to have more fun than a human being should be allowed when talking about all this boring financial stuff. So you've come to the right place. Let me bring into the conversation Jordan Roach, our Chief Investment Officer Extraordinaire. Jordan, good to see you.
Good to be here today.
Man, we have an exciting topic, right? Tax-free Social Security.
Sounds pretty good.
I mean, right? That's really cool.
Sounds good,
So,
yeah.
First of all, let's set the stage, because before we even can tell whether our Social Security is going to be tax-free or not, we need to know how they go about taxing it.
Sure.
And there's this thing called your provisional income that determines whether or not you're going to pay tax on Social Security. So tell us what that means.
Yeah, we want to make this as complicated as possible, usually, with IRS. You know, we have modified adjusted income, we have our adjusted gross income, we have provisional income.
Provisional income.
And that just applies to Social Security. And so it actually is a fairly simple way to figure out what it is. So Social Security uses a provisional income to determine how much your Social Security benefits will be added to the rest of your income to find your total taxable income. And how we do that is fairly straightforward. We take your adjusted gross income, which is kind of your total income.
It's the number at the bottom of the front page of your tax return.
Right, before deductions come in there. So take that number, add in your tax-free interest. So, for instance, let's say you had municipal bonds paying you interest. Okay. Add that back in. It's no longer free anymore. Add it back in.
So they figured out how to tax your tax-free income. Okay,
that's
right.
Cool. That's right. And then add in half of your Social Security benefit. So you add those three things together, and you're going to get your provisional income. And then what you're looking at is if those numbers add up to $25,000 or less for single, or $32,000 or less for a married couple, then none of your Social Security benefit would be taxable to you.
So that's the goal.
That's the goal.
Is to make your provisional income less than $32,000. But if it's between $32,000 and $44,000, it's 50%. Right, they tax 50%
for a married couple. That's right.
And if it gets over $44,000 for a married couple, now they tax 85% of your Social
up to 85. That's exactly right.
So it can get pretty draconian.
That's right. So all of that's a fairly small amount. You can have a lot of it added back to your income, have a tax bill.
And you just said we're going to get into complexity. I think that Social Security, if they had an Olympics for the most complicated, the most complexity, right,
yes,
of any organization in the government, I think Social Security would I think they'd beat out the IRS. I think the IRS would get the silver. Social Security would get the gold.
As many iterations and permutations, amendments.
They have won it, like for the last 100 years.
They have.
Social Security has won it every time.
Yes.
All right. So you've explained the provisional income. That's how they go about figuring out how much your Social Security is going to get taxed.
Right.
Okay. Now, the next thing is we just had the big, beautiful bill, right, that passed.
Yes.
And does that change that provisional income calculation?
No change there. So you're still going to do the standard calculation to determine your provisional income to figure out, again, how much of your Social Security benefit can be taxable, right? Now, the big change, though, how they that doesn't change. What is changing is they're adding an additional deduction.
$6,000, right?
$6,000 per person that can be used to offset some of your taxable income numbers.
So the number that goes into the provisional income gets reduced by that $6,000.
That's exactly right. So again, you look at your thresholds, and you add up your provisional income, which determines how much Social Security benefit is taxable. Add your other income sources, and you have a total number. That's now your new gross income. Mm-hmm. Well, now what you get to start doing is government's going to give you deductions. So you've always had a standard deduction, but now you've up to $12,000 more to deduct from that number to figure out how much actual tax you're paying.
You just confused the heck out of me. I don't even think
Social Security. Social Security. What do you want?
I think you win the gold medal now.
Yeah.
The heck with Social Security. Okay, so basically, if you kind of do all the math and everything, then you could have income up to $45,000 from various sources if you all massage it all together and still have no tax on your Social Security.
Yeah. So take all that nonsense I said, provisional income plus your other income. And if it's around $44,000, you'll have enough deductions because of this $12,000 bonus pool to make your taxable income effectively zero.
Wow, that's pretty cool.
Which is a good deal.
And so it's not actually an elimination of the tax of Social Security on Social Security.
No.
It just, because of the increased deduction or reduction in your taxable income, it now makes it to where 88% of people out there are not going to be paying tax on Social Security.
That's right. It's a workaround. It's not directly guaranteed eliminating your Social Security taxation, but for a lot of American majority, it is going to cause it to where they're not going to have a tax liability for Social Security.
Okay, so let's talk about how does a retiree figure out how much income they can have before paying tax on their Social Security? How do they go about doing that?
So again, we got to find that provisional income number, right? So we're going to sit down and say, okay, how much income do you have from all sources? So take your earnings or supplement employment income, take distributions, find those numbers, add back in that tax-free interest, and then you're going to take half of your Social Security, whatever that is, add those three sources up, and figure out where do you sit. Are we under 25,000? Are we under 32,000?
Which threshold are we
Which
at?
threshold?
Yeah, and I want to be clear. When I said they will tax 85% of your Social Security, it doesn't mean they're going to take away 85% of your Social Security. It means that 85% of your tax of your Social Security is going to be added to all your other taxable income to determine your total taxable income.
So another way to say that, right, is if you had $10,000 Social Security payments, $8,500 now is income that you have to add to everything else to determine your taxes.
Right. Okay. Right. So any common mistakes you can think of that retirees might make?
I think a big one for a lot of people is they expect a big tax liability on their Social Security. So what they do is withhold way too much money from their Social Security payment. They might say Social Security withhold 25% out of the gate in my taxes. And for a lot of people, especially with this new provision and there's new deduction, that's probably going to end up being too much.
So they might be leaving money on the table, by trying to make life easy.
That's right. So that's a big one. So they're going to be withholding too much, which means less money coming to them every month. The other thing can happen is they think that they're in a good spot with their Social Security, with their provisional income, and so they start taking distributions out of their accounts because they're at a low number. They forget that those distributions add back in as income, and now are pushing them over those thresholds.
And suddenly they may be in a higher tax bracket.
And now they're in a higher tax bracket because of Roth conversions, taxable distributions, all those things.
All right. So if somebody wants to maximize their tax benefits and make sure that they're getting all the bennies that came from the one big beautiful bill, completely self-serving question here, what should they do?
Yeah, hopefully sit down with a retirement planner, right, with a firm, and have them work through that with you. First, determine, again, what is our provisional income, what's our starting amount, and then look at kind of where your accounts are if you need additional income to make sure we have tax-efficient withdrawals, what tax brackets you're straddling, and just, again, making sure you have another set of eyes on all this stuff that you got to work through.
Yeah, and, one of the things that we also do is to look at distributions from IRA accounts versus distributions from your non-IRA accounts.
Yes.
Because every dollar you take out of your IRA account is considered ordinary income. Mm-hmm. And the money you take out from your non-IRA account could be capital gains, or if you spent down all your gains, it could be tax-free to you as well. So that's another strategy where you might have no tax on your Social Security, right? So
absolutely. Yeah.
So the planning opportunities abound.
They're not small. That's right.
They abound, ladies and gentlemen. We've got an abundance of ideas that we want to share with you. But of course, everybody's different. Everybody's situation is different, and so these blanket statements we're making are correct. But nevertheless, how they apply to you specifically is dependent on your situation, your income, your age, all those kind of things. The disparity in age between you and your spouse. Are you single? All those things come into play. Your health. So we want to make sure when we visit with our clients that we take all those things into consideration and we build a Social Security plan. And ideally, in a perfect world, we'd want to see you not pay a single dollar in taxes on your Social Security. So there you go. We had more fun than a human being should be allowed to have when talking about this boring financial stuff. Hopefully we took some of the complexity out for you. I hope you enjoyed this. Please like and subscribe. We've had over 1 million views of our podcast thanks to you, so I appreciate it. And hope this found you healthy, wealthy, and wise. And we'll talk soon.
Retirement Planners of America, RPOA.com.